Welcome to Share Talk, the only podcast where investors come first.
Hi, this is Zak Mir with the weekend edition of the Bulletin Board Heroes here on Share Talk for Sunday, the 15th of November. Starting off with a Vactor, where see the shares are a bit behind maybe Synergen and others, which have rebounded. What's interesting here is that we had that minor bear trap from below 96, the low this month 88, which is quite a big bear trap actually. And we've got now the shares finding resistance really around the 200-day moving average at £1.14. Still, we need to see an end-of-day close above that. If we get that over the next couple of sessions, then maybe we can retest old September support at £1.36 is the best-case scenario. But we've got to deal with really the shares being between £1 and £1.14, which is obviously quite a wide range in terms of the base building. But in fact, the easiest trade here really would be to wait for any dips towards £1 if we get them. On to a stock which is new, one which I missed out, which is part of the reason for the weekend edition, Digital Box. Looks like it's had a weekly close, breaking that line of resistance from January, and that could give us some decent forward momentum. Top of the channel there from September last year up to 11 pence, which would be a nice 1 to 2 month target. The reason for being relatively keen on this situation, apart from the trend line break from January, is the one-day bear trap that there was 4.9 pence, that sort of little reversal, which is good, and also the bear traps in August as well below 5p. So basically there, anything below 5p just looks as though it was designed to flush out weak longs ahead of a move to the upside. Another blast from the past, which looks as though it is back, is Philtronic. Here the idea is that we're just breaking a falling wedge in place since July. The falling wedge level about 8.8 pence, so a weekly close above that. But the view here is that at least while we're above the 200-day moving average at 8.42 pence, we could hit obviously the 2020 resistance area at 12 pence, but also up to that March resistance line projection as high as 14.5 or even 15 pence on a 1 to 2 month time frame. Clearly, if you're cautious, you'd wait for 10 pence to break, but I think that would give away a bit too much of the potential upside if we had it. The other final point there, which I've just noticed, is the bullish divergence in the RSI window, lower low for November, but the RSI remained at the same level as it was in October. On to a stock which I have been meaning to cover for several days, didn't quite do enough. Gatoro still hasn't quite broken that line of resistance from February at 2.6 pence, but I would reckon that we've probably done enough. So if we get an end-of-day close through 2.6 early in the week, then that would be a sort of definitive trigger there. As far as the reward, if we keep moving, that would be up to the top of that February trend channel at 6.5 pence over the next 1 to 2 months, and dirty back below the 50-day moving average at 2.34 pence on an end-of-day close really delays the upside scenario after we've actually broken the initial November resistance at 2.5 pence. Couldn't resist looking at Omega Diagnostics, given that every other tweet on FinTwit at the moment seems to be regarding this particular stock. Here we've had a dance either side of the 200-day moving average, which is quite normal and quite decent in such situations. That's a 49 pence. I suppose at this stage, if we had any dips, future dips towards 49 pence, that would be a technical entry point with a stop loss just below the 42 pence low of last week. The alternative is to wait for an end-of-day close above 60 pence, which is Friday's high, and then hope that the next target or the next destination after that would be up to the 50-day moving average at 82 pence. But we might have to factor in a bit more of sort of jiggery-pokery between 42 and 60 over the next few days before a breakout to the upside actually happens there. Stock which has bounced quite well and is looking pretty decent is Panth Resources. The reason for the relative enthusiasm is the way that we had a intraday bear trap down to 27.7 pence versus the 28.5 pence October low. So a minor new low for November and then straight up. And view at this stage is at least while we're above the 30-day moving average at 36 pence. That's the yellow line there. We should head up towards the top of that trend channel from July as high as 52 pence, just taking out the October peak. So, and that's over the next 2 to 4 weeks. We haven't seen the next stock for quite a while, Provexus. Here you can see that not only broken the top of that falling wedge from August, but also gapped through the 50 and 200-day moving averages on Friday, which is a pretty good momentum signal. We also had a narrow bear trap for November versus October, so that's another buy signal there on a technical basis. So putting it all together above the 200-day line at 0.68, looking for as high as 1.3 pence at that December resistance line projection over the next 2 to 3 months, which would be quite a nice recovery in percentage terms. Notice that the bears are having a go at Powerhouse Energy, so it might be worth just seeing where they are on a technical basis. It looks as though the stock's actually broken that line of resistance from July, and call that the 2.8 pence level. So while we're above that, we've actually broken out. Obviously, one could wait for an end-of-day close above recent intraday resistance at 3 pence. But while that line remains broken above 2.8 pence, we are looking for, in theory, a 5.5 pence target at the top of that March rising trend channel. So it looks as though the work there's already been done. This stage, really back below the 200-day line, 2.42 pence on an end-of-day or weekly close basis really kills the bull argument for the shares. Lots of chit-chat over the weekend as far as remote monitored systems is concerned, so I couldn't resist looking at that, as I haven't looked at it for more than 24 hours, I think. But basically, that we had that big rise on Friday, and some people looking for the 5.8 pence peak of October as being the high of the move, but actually it looks like the shares are in a rising trend channel from the end of last month, based on the last October high and the initial November high. That could take us as high as 7.8 or up to 8 pence over the next week or two, hopefully, maybe a bit sooner. And the upside target of 8 pence as a best case scenario, valid while there's no end of day close, back below Thursday's intraday peak at 3.5 pence. Ideally, we don't even go back below 4 pence, but 3.5 pence there, a old resistance, hopefully becoming new support. Just a couple of stocks to go now. The first is Verditech, which has made a recovery, a decent move back. I was sort of dithering on it over I could have looked at it on Thursday, but just wanted to make sure that it crossed the line there from August around 8.5 pence, and above 8.5 pence we're looking for at least the October peak around 12.5 pence over the next 2 to 4 weeks. Obviously the big picture target, while we remain above the 200-day moving average at 7 pence, is now as high as 20 pence at the top of that May rising trend channel. If you're cautious, maybe wait for the 50-day line to break at 9.4 pence, but I think we've already done enough as far as a rebound is concerned. Finishing up another stock where there's a lot of chit-chat and doesn't seem to want to stop, that's Panth Resources. Here we do have a potential buy trigger here, breaking that line of resistance from October at 0.18 pence and recent resistance at that level. I think we need to wait for that to break in order to get the first target here, which would be last month's peak at 0.2 pence, and the big 1 to 2 month target up to 0.3 pence, which is the top of a June rising trend channel. At least we have 0.16 as a reasonably hard stop loss on this situation. That's it for me today. More updates tomorrow.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.